Many thanks for staying. Welcome back. Now, the Monetary Policy Committee of the Bank of Ghana has reduced the policy rate significantly. The central bank dropped its key lending rate to commercial banks by 100 basis points to 22.5%. This is the second reduction for this year after the biggest rate cut of 200 basis points in March. The development could lead to further reduction in the cost of credit in the country. Governor Dr. Ernest Addison said the move was influenced by a favorable economic outlook for the country.
The committee noted that the pace of economic activity has picked up, driven mainly by growth in private sector credit, improved business sentiments, and easing credit stance. Furthermore, increased oil production from the Jubilee and 10 fields and the coming on stream of further activity in the oil and gas sector from the fields by the third quarter of the year should give added impetus to overall growth prospects. In sum, there is evidence to suggest that economic imbalances that existed at the end of 2016 are giving way to stronger fundamentals, with growth to pick up strongly in the period ahead, although it will remain below potential. The 2017 budget indicates a return to the path of fiscal consolidation. The reduction in the fiscal deficit for the year is expected to foster more stable macroeconomic conditions. Rigorous and steadfast implementation of the budget will therefore be critical to the outlook. On inflation, the committee noted that headline inflation and inflation expectations have broadly trended downwards. The disinflation process has been supported by tight policy stance and exchange rate stability. With a stable outlook for exchange rate movements and return to the path of fiscal consolidation, headline inflation is expected to trend towards the medium-term target in 2018, barring any unanticipated shocks. Given these considerations, the committee judged that the downside risks to growth outweigh the upside risks to inflation in the outlook, and therefore decided to reduce the policy rate by 100 basis points to 22.5%. The committee would continue to monitor risks and take the necessary policy actions to move the headline inflation towards the medium-term target. Thank you very much.
Meanwhile, the central bank governor, Dr. Ernest Addison, says the bank would focus on addressing industry issues first before going ahead to increase the minimum capital requirement for commercial banks.
The issue of the banks that are not meeting the minimum capital adequacy requirements, I should say that, yes, there was an asset quality review that was done at the end of last year, which led to the downgrading of some accounts, and that downgrading process led to a requirement to make more provisions in the banks, which led to the need for recapitalization, or led to a reduction in the levels of their capital. This is why the Bank of Ghana asked those banks, I think there were about 9 banks, to submit recapitalization plans. I should say that most of them have submitted the plans, which have been reviewed by the Banking Supervision Department. There are just a couple of banks that we are yet to sign off in terms of agree on the feasibility of the plans that have been submitted. But I think that there is progress on that issue. It's important for us to understand recapitalization. Why do we need to recapitalize the banks? I think that the recapitalization has become necessary because of weak economic growth, weak credit management skills. So the fiscal, quasi-fiscal activities which impacted negatively on the banks. So these are the underlying problems that we have faced as a country, and we have seen the spillover effects of that in terms of financial sector performance. It's very easy to recapitalize without addressing the underlying problems which led to the recapitalization in the first place. So we could just recapitalize and go on and badly manage things and then come back to the same square one where you have to go back and recapitalize again. If you look at it that way, I think that it's important for us to take our time, not only in announcing what the new capital requirements are. We must be clear in our minds what we are trying to achieve with this whole process of recapitalization.
Now, the governor also expressed his resolve not to finance government expenditure by enforcing the zero financing policy.
The issue of the drawdown in government deposits and the zero financing commitment, I think that we've been very clear that we are not financing the budget this year. If you look at the data that we got from last year, there was no central bank financing of the budget. And I have been on record to say that if we were able to desist from doing that in an election year, then we should be able to carry that forward, in other years. So there is really no central bank financing of the budget from here. What you're seeing in terms, these are government's own deposits with the central bank. If government draws down their deposits with us and we think that it's increasing the liquidity in the system, we use our liquidity management operations to neutralize the impact. So we are not too concerned about the current level of drawdown of the deposit to finance government operations, because we are managing the impact using our liquidity instruments.
Away from that, the country's debt stock has increased by 5 billion cedis in just 3 months to reach 127 billion Ghana cedis. That's according to the latest economic and financial data released by the Bank of Ghana. Is this an indication that government is losing the fight against containing rising public debt? George Rafi tells us more.
The significant increase in the public debts in just 3 months has raised questions about the effectiveness of government's plan of reducing the rising public expenditure, despite several policies like debt reprofiling to contain the situation. The 127 billion debt stock recorded is still higher than what was posted in the same period of 2016. It's accounted for more than half of the total debt stock. But sources close to government insist the increase didn't come about as a result of fresh borrowings on the part of this new administration, but rather the city's depreciation in the first 3 months of this year, some payments that were already arranged by the previous administration, which were made in the first quarter of this year, that resulted in a significant jump in the debt stock. The source adds measures instituted by this administration to contain the debts will be seen after June this year. However, when you look at the 127 billion Ghana cedi debt in relation to the size of the economy, it has reduced to about 62%. This could lead to the country being removed from the list of countries that might have serious challenges in paying its debts on time. On the banking front, the data showed that the industry wasn't doing that bad, despite reports that some 9 banks are in serious financial distress. It showed strong growth in lending to the private sector, deposit attraction, growth in assets, and also marginal reduction in loans that banks fear might go bad. The amount of money the country has to support imports in case of crisis has reached $6.3 billion.
Meanwhile, economist Professor Peter Quartey tells Joy Business government needs to do more if it really is committed to dealing with rising public debts in the country.
We haven't seen a decline in the debt stock, but rather some increment of our $27 million. If we are fighting against debt to ensure that the debt figures are reduced in the next 4 or 5 years, then any increment, in my view, is not something that Ghanaians will welcome. But having said that, if the debt GDP figures we are seeing is something that can be confirmed, it's a massive decline in debt GDP. What it tells you is that perhaps the debt is being invested and GDP, we are increasing GDP, and that, for me, is a good signal. But one has to be cautious with this figure because I cannot confirm any GDP figure for March 2017.
Now, the Ghana Investment Promotion Center, GIPC, has urged small and medium-scale enterprises in the country to take advantage of government's industrialization program and partner other foreign investors to provide support services for upcoming industries. The Director of Investor Services at the GIPC, Edward Ashon Latte, made the comments in a speech read on behalf of the Chief Executive, Yofi Grant, at the Maiden Busy SME Network Series held in Accra. There's more in this report.
The SME Networking Series is an opportunity offered by Busy to small and medium enterprises to share business ideas under one roof. The maiden edition, which was held at the premises of Busy, witnessed a massive attendance from entrepreneurs from the agricultural, technology and financial sector to network. Speaking on behalf of the Chief Executive of the GIPC, Director of Investor Services, Edward Ashon, called on SMEs to partner with foreign counterparts to offer services for the industrialization program.
Under the One District, One Factory, you've all heard about a number of programs being put in place to ensure that this thing succeeds. And for the SMEs, I think you can provide the needed support services for the companies which will be established under the One District, One Factory. Let me just go back to my Japanese example again. So all these people were, I don't know if it was a broomstick or something, but all these companies were producing this for a big company. So if we have the One District, One Factory, and let's say there is a factory processing pepper, and we have a lot of these SME small outgrower farmers, they can come together and then provide the processing factory with the needed input so that that factory can also be able to meet its orders both locally and externally.
The program is expected to be organized frequently to give a common platform to SMEs to share ideas. Praveen Sadalaj is the Chief Executive of Busy.
As you know, has been on the, in Ghana since 2001. And right since the early days, we have always been very entrepreneurial and enterprising and collaborative in our approach to business. So when we started off, what we saw is that there is so much of talent, young energy that is there, latent, which needs to be brought out. And so that's how this Busy Internet came about. We were the first incubator in Ghana, informal probably, and then later on there were other investors who came in. What we have done in the whole journey of the Busy in the last 15, 16 years is nurtured entrepreneurship, nurtured ways of doing business. Busy itself is a startup, and what we have done in the last 15 years, 16 years is always been ahead of the curve, tried to be innovative about how you do business internally, and as well as look out for opportunities where customer behavior is changing and you are accordingly acclimatizing and changing your business plan.
Participants are optimistic the program will help them meet the right business partners.
There's something Hine Otumfo said to the second is advocating the utilization of the Petroleum Heritage Fund as collateral for banks to support farmers expand their agric industry. He is optimistic this will be a more appropriate approach to expanding the private sector as well as helping it to address unemployment. He adds it will also boost the economy and prevent over-reliance on the country's oil and gas resources.
Government has recently launched the Planting for Food and Jobs program. We should be thinking of how we can invest in the agric sector. If the banks can't help much, what should we do? We can use the Heritage Fund as collateral for the banks at lower interest rates to support the industries.
At lower interest rate, industry
On his part, the president of the Chamber of Commerce and Industries, Nana Apia Dankawoso I, said measures must be instituted to support efforts by government in the One District, One Factory initiative.
We have upheld the government's One District, One Factory program. We will organize a program on it coming this Monday in Accra. If the program comes into force, it will help the agricultural value chain. There will be many interventions in that direction.
Agriculture, the value chain, interventions.
The Ghana Beekeepers Association is calling on government to support its activities with the provision of adequate funding. The call follows an initiative to be launched by the association dubbed Beekeeping for Rural Economic Programs. The initiative seeks to create more employment for rural communities in the country. There's more in this report.
The Beekeeping for Rural Economic Program will soon be launched by the Beekeepers Association as a measure to harness the opportunities in beekeeping and as a livelihood for rural areas in the country. The association is therefore calling on government to support it with about 50,000 Ghana cedis to be able to roll out the program. Oscar Nati is the secretary of the association.
We want government to facilitate or to empower these class of people that we've identified with just 50 hives per head. Every farmer gets 50 hives to start with. That will trickle down to about 50,000 Ghana cedi for each farmer, each beekeeper to start with, because each hive is giving you 30 kilograms of honey, and for each 30 kilograms of honey, if you assume, which is not exactly the case now, but if we assume that a liter of honey is 12 cedi at the farm gates, then that is trickling down to about 50,000 Ghana cedi if he's harvesting 3 times, which is the normal trend.
According to him, the program has the potential to employ more than 3,000 farmers. He explains.
A carpenter over there, the contract to construct 50 beehives, 1,000 beehives, and you are paying such a carpenter 50 Ghana cedi for constructing 1 hive because you are buying every material for him. You see, at the end of the day, that's constructing that 1,000 hives, you're empowering that individual carpenter with 54,000 Ghana cedi. You get me? So it goes a long way to help the economy, and it will cut down on rural-urban migration. It will cut down on people wanting to look up to government as a father, looking up to government to do any other thing for them. People will be economically empowered. And we have the demand from outside. Even the local demand, we are unable to meet it. You see, so it means that we have the opportunity. The market is not a challenge. We can produce, but why are we not producing? Because of capital.
The association says it is ready to partner government to roll out the program.
This is Business Live. We're taking a short break here. When we come back, it will be the stock market analysis with our researcher, Beta Atubika. Thanks for staying. Welcome back to Business Live. It's now time to go to the stock market, and I've been joined by Beta Atubika to run us through what happened last week and what we're to expect this week. Good evening, Beta. Welcome.
Thank you very much.
Now, how did it all end last week on the stock market?
Okay, last week the stock market actually did very well. We had lots of equities gaining, and we had just one loser. EcoBank lost about 8 pesos last week on the stock market, and it was the sole loser actually. And then we had BOPP, GO, and other equities gaining on their week open prices. The major indices, that's the composite index and the financial stock index, closed the week on a positive note, still returning positively to investors. CI is at 13.43%, and the financial stock index is at 16.29%, which is still positive. And we have about 8 or 9 equities actually returning positively to investors, and that should tell you that this year began on a very good note and is still having that momentum. So investors should actually look out for the stock market to get very good returns by end of this year. If possible, they can also, with good advice, they can get short-term gains on their investment on the equity market.
All right, so last week we also saw that GOIL also posted quite a significant performance at its annual general meeting. Could you brief us about that? and its impact on
yes,
the stock market?
I was actually at the AGM, and it was a very successful one, and it's actually I will not say a battle, but it's a challenge to the incoming board to put things or continue from what the outgoing board did for the company, because there's some drastic change. If you look at 2009 to date, 2016, the company has done tremendously very well with the rebranding and other stuff. And though their dividend payout is very low, but the company in general did very well. And if you look at the profits that the company actually made in the year 2016, it should tell you that investors should look out for their equity. And last week,
why would the company post very low, dividends? Because I saw
sometimes it doesn't all come in the form of dividends, but some of the shares are diluted. They issue bonus shares and all that, but they don't actually give you out the fiscal cash. And their dividends, well, the outgoing board said they are better stocks in future, so they should look out for the best. And last week on the stock market, gold gained 16 pesos. It was a top absolute and relative gainer on the exchange, adding about 11% to investors' capital last week. And investors should look out for gold, because this year alone, gold has returned about 42% to investors, and that's the third equity that's returning the most to investors on the stock market.
What should we be looking out for this week? What should investors actually be looking
This week, we're expecting GCB to go in further. We're expecting Standard Chartered Bank to also add up some gains, and then we're also expecting FML to also add up gains on the stock market. So if investors want to purchase shares now, they should look out for these equities for short-term gains and long-term. But this week, if you're looking at equities that will appreciate on their week open prices, that's today, then they should look out for this equity: GCB, FML, and then Standard Chartered Bank.
Right. Finally, before we go, any news by way of the currencies?
Yes, the CD, that's the Gold Coast CD index, is actually returning a year-to-date depreciation of 3.87%. That's how far the CD has lost. If you look at the CD, that's a close of Friday. It has an average quote of 4 Ghana cedis, 24 pesos to the dollar, 5 Ghana cedis, 53 to the pound, and 4 Ghana cedis, 75 pesos to the euro.
Thank you very much, Bertha,
You're
for
welcome.
your time. And that was Bertha Atubiga bringing us up to speed with development on the stock market. We'll be taking a short break. We'll be back after this. And this is where we draw the curtains down on this evening's edition of Business Live. Thank you very much for watching, and do join me again same time tomorrow for more interesting developments in the world of business. My name is Emmanuel Apuaji. Have a good evening.